Hi, everyone. Good morning. I'm really excited to be here and to get to interview Liza, who's the new CEO of Stash. I've been involved with Stash as an investor for 7 years, maybe. And this is an extremely exciting chapter, both for Stash and for the industry that Stash is building in. So we are going to jump right in. So Liza, you have had a really storied career and a broad one at places like Citigroup and BlackRock and E-Trade. And more recently as an investor before we lured you back into the operating side to be CEO of Stash. So what brought you to Stash and got you excited?
Thanks, Rebecca. It's very exciting. We were saying this backstage. It's very nice to see two women up here, so about that. It is true. I took a 5-year hiatus from operating to be an investor at NEA, which is an amazing fund, and loved my time there, but I realized just whether it was like the yen to get back into the trenches or I'm just a glutton for punishment, but I really wanted to return to the operating world, and sort of the litmus test for me was, could I find something that appealed equally to my better angel on one shoulder and my capitalist angel on another shoulder. And Stash was really that perfect blend for me because I so love the mission of the business, but I also see such a huge commercial opportunity there. And so was really excited to join the team about 90 days ago.
And so the mission of the business and as investors, the same kind of combination that you just spoke of was what got us excited, right? That there's this massive commercial opportunity, but you can achieve it by doing something that's really important for Americans and for this ecosystem around democratizing access, first to investing and then to a broader set of financial services products. That was the original goal of Stash. Obviously, much has been achieved both for this company and in the market. But where do you think we are on that trajectory and what comes next?
Yeah, I mean, look, Stash's mission, for those of you who aren't familiar, is really providing economic security for lower and middle income Americans through investing. And one of the things that has been long-term the promise of fintech is that it does democratize access. And certainly, I think we've seen the beginning of that and the capabilities are there. But I don't think that access has historically been equally distributed. And that's one of the reasons that I think Stash has done an amazing job bringing millions of Americans onto the platform, but miles to go before we sleep. And I think for Stash, there are a couple of things that are key. One is really continuing to fulfill that promise of guidance and education for early, or I'm going to say like less confident investors. I thought it was interesting, Simon talked about that in terms of platform confidence. But I think in our category, in fintech and in consumer finance writ large, the ability to have your own confidence, like confidence in your own ability, but also trust in the platform is critical. So that's a central part of what we're focused on, as well as I'm sure every person you'll hear talk today will talk about our march to profitability, which is in striking distance for us.
Yes.
Which I see the big smile on your face, Rebecca.
That makes me happy.
So those are the things that are front and center for us right now.
Yeah, I mean, you talk about how trust is enabled, which I think is such a big piece of the puzzle for these businesses. And Stash's approach is part in how trust is enabled through product.
Yeah.
What's your thought on how that works in the ecosystem, right? Trust can be enabled in lots of different ways, but it's really scalable when product can play a big role in that.
No, look, I mean, I think it's an interesting moment. Just when there's market volatility, as there has been, it is one of those times where consumers really kind of have a focus on flight to quality. I think one of the structural advantages that I've always appreciated about Stash is that the business model itself, which is a subscription, is actually like a disruptive innovation for a couple of reasons. One, it gives really like almost complete transparency around the fee. So you don't have any of the sort of gotcha fees or surprises on how much it costs you to engage in this part of the market. And it's very, transparent to the consumer. Two is that because, the overwhelming preponderance, north of 80, 85% of our revenue is generated from our subscription fee, It means we have the tremendous luxury of being wildly aligned with the consumer. So we don't need them to transact all the time. We actually just need them to do the things that are in their long-term best interests. And that allows us to actually focus them. And so we do things structurally on the platform to create nudges toward like long-term healthy, sustainable behavior. So things like a limited number of trading windows, because we know for most consumers, actively day trading is not the way to build sustainable long-term wealth, and we want to make sure that all of the things that we are doing are truly in the consumer's interest.
Yeah, the next question I was going to ask you was about Americans' adoption of digital products and consumer fintech, which I'm curious your thoughts of. But one thing there that I think about is we will get there faster with increased alignment of the products and the people from a fundamental model perspective, which is kind of what you're talking about.
Yeah, I absolutely believe that's true. I think, you mentioned this earlier. Earlier in my career, I worked at great storied companies, Citigroup, BlackRock, E-Trade, Jet, for those of you who are e-commerce fans. But one of the things that I remember, because I worked at Citi in the 2000s and I was there through the Great Recession, is, we thought at the time that American trust in large banking and financial institutions was an all-time low. Surprise, not true, lower now. And so what it means is that the platforms and the players that can actually earn and maintain the trust of the consumer are going to have a dramatic advantage from a scale perspective, because I always use this analogy. Think about, for a long time, the greatest single source of call volume for Domino's was people calling to say, like, where's my pizza? And that's what led to the brilliant innovation of the pizza tracker. Pushed call volume down off a cliff, reduced their cost. They didn't deliver pizzas any faster, but it reduced people's anxiety about where their pizza was. And so what I always think about in our category is if people have that much anxiety about where their pizzas are, think about how much anxiety they must have about where their money is.
So true.
And so in some ways, like, our job is the reduction of anxiety in probably one of the most anxiety-producing categories that exists.
I think that is a great point and a really good example of how technology and product can be really aligned with the goal here. You are building this in the face of some kind of grim trends with savings rates and retirement around, the American, consumer and user here. What is Stash doing that you think is really different to help that consumer and to really, provide access?
Yeah, it is true, and I know Simon also talked about the fact that, more Americans living paycheck to paycheck, even at higher economic levels, and so it does create challenges. It does create a flight to quality, and it does create the desire for consumers to have something that is very predictable. I think, there are definitely things that we've been doing structurally all along. So the alignment of the model, the lack of need to transact, but actually to be in a buy and hold position. But as an example, because we know lots of our consumers still like to hold on to some cash, one of the things we've been doing as an example, we have a great product on our platform that's an ETF called T-Flow from BlackRock. Part of the advice that has been delivered to our consumers lately is to take some of that cash that they've been keeping on the sidelines and put it into an instrument like T-Flow, which is generating an industry-leading about 5% return short terms, but it has cash-like risk. And we've seen more than 125,000 of our consumers actually benefit from taking this advice. And that's one of the things that we think is really important about being on a platform like Stash, which is there to it gives you a lot of choice and freedom, but actually gives you real advice and guidance towards something that is long-term sustainable. And we're always trying to strike that balance of giving people reasonable choice, but all of those choices aligning toward these nudges of not, I have a lot of food analogies, I'm realizing this as I'm about to speak, but not sugar-filled calories, but very protein-filled calories. And that's sort of the approach we take on the guidance and content and education of the center.
How do you think that relates to the market we're in, too? I would assume that with a shifting market, that's more important, or does that kind of change how you approach that at all?
I mean, I don't think it changes our approach. I mean, in the sense that if you like sort of step back and look at the market over the last 20 or 30 years, what is the best thing consumers can do? Like early 2000, invest a small amount of money over time in a diversified portfolio with a hold strategy. What was true 10 years ago? Invest a small amount of money consistently over time in a diverse portfolio, which you buy and hold. I'm going to keep saying this over and over again, in case that. But some of the specific things around portfolio allocation, what we suggest people do with their cash, obviously that's very different in a high interest rate environment than what we would have suggested 5 years ago in a low interest rate environment. And so, not that that's a nuance, but I think that's sort of a shift in degree, not a shift in strategy or approach, because what we're trying to do is help people build habits for a lifetime, not for the moment.
Yeah, absolutely. So you're 90 days about into your tenure at Stash. What's been surprising?
So there are two things that have been really surprising to me. My friends who are still current investors, forgive me, like I forgot how much fun operating was. It's just great to be sort of in the trenches working with a phenomenal team. I'm incredibly fortunate. The two co-founders at Stash, Brandon and Ed, are still deeply involved in working in the business. They are fantastic founders and wonderful human beings. And I'm so appreciative of their partnership and ongoing engagement. But I sort of thought, I remembered the last time I worked at a startup, which was 5 years ago, and I was like, this is going to be incredibly hard work. And it is incredibly hard work, but I literally come in every day, like smiling ear to ear. The other thing that probably shouldn't have surprised me, but my Diet Coke consumption has gone dramatically up. So I'm not a coffee drinker. That is my primary source of caffeine, and it's probably approaching dangerous levels again.
When you look a year into your tenure, 2 years into your tenure, what do you hope to accomplish, or what's kind of up next for Stash?
So there are a couple of things. One, we are very passionate and very committed to our mission, and part of that commitment is saying, we have a little bit north of 2 million subscribers on the platform today. I think there are reasonably 85 million households in America that would benefit from being on the platform, and so I don't think all 85 million will be on in the next 2 years.
Maybe.
From your mouth to God's ears. But I certainly expect, 2 or 3 times that number can and should be and will be on the platform within the next 5 years. I just think it's so relevant, so applicable, so necessary. So that excites me. The second is Brandon, who I mentioned, who's one of our co-founders. What he is spending his time on right now is developing some new channels and new partnerships for us in the B2B space, and we're incredibly excited about creating access just through these new channels. I always say this, which is, I don't care where I meet the love of my life. Do I meet them through direct-to-consumer channels or through their employer? It's fine with me either way. And so that's really exciting. And then last but certainly not least, and I know near and dear to our investors' hearts, is we are kind of in striking distance to profitability, and we are pursuing that with vigor. And we are very fortunate in that, unlike what you see in a lot of other fintechs, although we're already at good critical mass and scale, we have actually extremely attractive unit economics and margin. And so that growth gets to be, I think, in no short order funded by us, which is very exciting. So we don't have the old razor problem, which is you lose money on every unit, but you make it up in the volume. We're actually in very healthy shape, and so we're excited about just creating more engagement with more and more consumers.
Yeah, absolutely. I mean, Stash, took somewhat of a different financing story than a lot of other peers in the industry. It certainly has raised a bunch of money, but not to the extent, and I'm sure what will happen a lot in this conference is talking about the changes going on in the technology part of the fintech market, and the way Stash has approached a balance sheet is helping them right now because it has that sightline to profitability, would be my guess.
I mean, look, one of the things that the business did last year as we think about sort of core technology is that a big part of our technology stack had been outsourced, and the team did a remarkable job sort of moving us off a third-party platform and building our own Stash core platform for a big part that gives us not only really attractive sort of, physics on our unit economics, but also gives us a lot more agency and ownership around feature functionality and also the ability to hook into lots of different kinds of great partners to add products and services to the platforms much more fluidly. That first product that we hooked in was banking through our partner at Stride Bank. But I think, anything that gives you like a lot more agency and control over your destiny and puts so much to the bottom line of the business, like, was a great move, and I certainly was extremely appreciative when I joined to have a lot of that work already done, because it just gives us a great springboard from which to pursue like tighter and stronger and more inclusive customer experience.
Yeah, absolutely. So that's a little bit, I think, on where Stash is going. When you look at the fintech ecosystem, how do you think, you look 10 years out, what are the kind of core differences on how 99% of America is using fintech products in their daily financial life?
I mean, it's a really good question. I always say, like, post-2016, I'm a bit out of the prediction business. But I'd say a couple of things. One, there's a fundamental question. I know I've, been at a bunch of conferences, and lots of people are always like, is fintech dead? And I'm like, I don't really understand that question. Are we asking ourselves, will more consumers use technology-enabled platforms to save, earn, and invest money? And I think the answer is unequivocally yes. Will more AI be used to generate product services or create personalization? Yeah, I think yes. Will there be greater ease of user interface through different kinds of biometrics? I think yes.
Yeah.
Do I think the sort of human interaction with the underlying concept of money, which is what things do I want in my life that I'm willing to pay for? I don't know. I don't know that that's changed so much in the last 10,000 years of human history. We've just been able to figure out how to deliver it faster, better, cheaper. And I think that trend will continue. I don't know what you think. You see lots of stuff that I don't see.
Yeah, I mean, I'm very optimistic that that trend line strongly continues, and that it can work on many more categories of financial life, right? And investing has been such a big piece of it, and you think about the huge strides made, even from just comfort level things and trust, linking bank accounts. That was a big, big issue at some point in time. And now people do that all the time, and partly that's a tooling solve, and partly that's a trust solve.
Yeah.
But when you think about access to credit and those kind of challenges that we haven't really cracked yet, that's what gets me excited about the time from here.
Look, I mean, there's a great quote in the Larry Fink letter to investors this year, and I'm going to butcher it, but essentially he says some version of investing is one of the purest acts of optimism that you can engage in, because it's sort of expressing fundamental trust in the future of markets and fundamental hope for the future. And I absolutely believe that. It's one of the things that I love about investing as the center of gravity of the platform, because effectively what you are doing when you invest is saying I believe in a future that can be better than today, and I believe I can take agency and ownership in driving that better outcome. And I love that as a business, I love that as a mission, I love that for our consumers. And I think, hearkening back to the point you made earlier, there's a lot of grim financial news, and yet in the face of that, we see more and more Americans willing and interested to engage in that. And to me, that is just incredibly reassuring about the fundamental optimism of American consumers.
I think that is a great point to end this conversation on. So thank you so much, Liza, and thank you all for listening.
Thanks, Rebecca. It's great to be here.